The US economy just dropped a bombshell. The August 2025 jobs report is out, and it's sending shockwaves through markets and the housing sector. If you're an investor, homeowner, or just trying to navigate this economy, you need to know what's happening. Let's break down the numbers and what they mean for your wallet. According to the Bureau of Labor Statistics, the US economy added just 22,000 jobs in August 2025, a massive miss from the 76,500 jobs economists expected per CNN. Even worse, June's numbers were revised to show a loss of 13,000 jobs, the first net decline since December 2020. The New York Times reports this signals a labor market that's stalling under intense economic pressure. The unemployment rate ticked up to 4.3%, the highest since 2021, reflecting growing cracks in the job market. CNN notes that black workers were hit hardest, with their unemployment rate spiking to 7.2% in July, a nearly four-year high. This slowdown isn't just numbers. It's real people struggling to find work in an economy rattled by uncertainty. What's driving this chaos? President Trump's aggressive tariff policies are a major culprit. The New York Times reports that tariffs on nearly all imports are jacking up costs for businesses and consumers, paralyzing hiring plans. One manufacturer told CNN, "Tariff bingo is tough. We're probably going out of business within 90 days. The Tax Foundation estimates these tariffs equate to a $1,300 tax hike per U.S. household in 2025, squeezing budgets and stifling growth. Now let's talk housing. The National Association of Home Builders, cited by the New York Times, reports builder confidence at a 5-month low due to tariffs, high mortgage rates, and economic uncertainty. The Wall Street Journal notes that rising material costs from tariffs on steel and aluminum are pushing new home prices higher. In August, the average new home price hit $429,900, up 1.3% from last year per Redfin, while existing home sales dropped 2.5% as buyers hesitate in this shaky economy. Mortgage rates aren't helping. The Federal Reserve held rates steady at around 5.3% in August, wary of tariff-driven inflation, which CNN reports could spike soon. The New York Times says the Fed is now likely to cut rates in September, but with inflation at 2.7% and core CPI up 3.1% year over year, relief might be limited. For home buyers, this means affordability is still a hurdle, with the median home price at $412,300 nationally per Zillow. Market uncertainty is the name of the game. The New York Times highlights that Trump's tariffs and federal job cuts, 97,000 federal positions lost this year, are freezing business investment. Consumers are pulling back too, with sentiment at its lowest since February per Gallup. This double whammy is hitting retail and manufacturing hard, with 12,000 manufacturing jobs lost in August alone, despite Trump's promise to boost the sector. So what's the takeaway? The August jobs report is a red flag for investors and home buyers. With tariffs driving up costs, jobs stalling, and housing under pressure, now's the time to get strategic. Diversify your investments, lock in mortgage rates if you can, and stay informed. Subscribe for more updates and visit our site for expert tips on navigating this turbulent economy. Don't get caught off guard. Your financial future depends on it.
Your ultimate hub for real estate insights, breaking news, entrepreneurial wisdom, investing strategies, and self-development hacks. If you're ready to expand your mind and stay ahead of the game floor, you're in the right place. Subscribe now. Your future self will thank you.